morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 Index. We'll kick off with the weekly Ichimoku cloud. The market's still in bearish territory since price action below the cloud is bearish, but there are some shorter term swing trades possible. Now, the major sell signal was at 4,600 and 4,500 for the long-term sell signal in the market. So it's been bearish ever since the index sliced through the bottom end of the cloud and confirmed that we're in a bear market. The shorter term swing trade possibilities are from these support zones here back up to the bottom end of the cloud. But for the market to be back in bullish territory, we need to be back above the top end of the cloud from an Ichimoku cloud chart perspective. Here we can see this 3,659 zone, which is fourth quarter support zone, as well as a cloud chart support level on the daily. Market did manage to rebound from that level. Then ran into a little bit of trouble here with the turning line of the cloud. Managed to break through that. Now we've got the front end of the cloud, this level to navigate from a resistance zone point of view. And then the standard line of the cloud, the purple line there, is the next key upside resistance level. So these are the two upside resistance levels, with downside risk back down to this 3,638. And then a major downside risk to 3,500, which is the front end of the cloud here. We can see we're still extended from the top end of the cloud. You can also see the sell signals right at the top of the market here. Beautiful sell signals, long-term sell signals on the monthly Ichimoku. This comes after the market became very extended after a multi-year rally over the last decade. Let's jump into the daily Ichimoku cloud. Now on the daily, we can see that rebound here at 3,638 zone, a cluster of support that comes from an old Ichimoku cloud chart support level. Then we had a nice little rally back up to the standard line of the cloud here, and that became a resistance area, as well as the turning line then became a support zone, back to the standard line, and then back to just below the turning line. But these highs there became a key support zone. Now the S&P is fighting the bottom end cloud chart resistance. We can see this front end cloud chart resistance zone. This is a key level that the S&P is fighting, this 3,976 and 3,991, 4,000 basically, with upside risk to 4,057 and 4,081. These are the upside resistance targets on the daily Ichimoku. But we do need to see a further grinding into this cloud of resistance. For the market to be bullish, we need to be back about this top end cloud chart resistance level, and that will confirm a new bull market rally on the daily Ichimoku. But in the meantime, there are some swing trade possibilities from these support levels back up to the bottom end of the cloud, and where we are now. If support holds at this cloud chart support zone, and we can see now maybe we get a little bit of a test of this standard line, the turning line, standard line of the cloud, 3,902. As well as the bottom end of the cloud, and then another thrust into the deeper into the cloud to get past the resistance zone. So that can be another swing trade entry here at 3902 zone if the futures pull back to that level, as well as the bottom end of the cloud. That's another potential rebound zone. But there's encouraging signs as long as we stay above this bottom end cloud chart level. If we dip back below this bottom end cloud chart level, then we're back in very, very risky territory with downside risk to these 3,659 zone and 3,500 once again. But so far it looks encouraging. If support comes in back in a 3,902 zone, then we're looking back for 3,976 resistance, and then 4,081 as the upside resistance on the daily Ichimoku. Turning to the 4-hour Ichimoku cloud. Good news, we're back above the top end of the cloud, so there's early signs that there might be a new rally starting. Since price action is back above the top end of the cloud, there's downside risk to this level here, this 3,900, the top end of the cloud there, and then the bottom end of the cloud that's another resistance support zone, 3,816. So these are the support zones for a potential rebound rally if these levels are tested. Now, as long as price action stays above this bottom end cloud chart, the bull market rally is confirmed on the 4-hour, but only the 4-hour chart. So we really need to see price action to stay above this top end cloud chart level, but it can test the bottom end of the cloud there. as well. So if the S&P dips below the 4-hour Ichimoku there, then that's a short signal. And when it gets to these levels, the turning line and the standard line of the cloud, as well as the top end of the cloud, that might be potential rebound zones in the S&P. The upside risk is then 4057. This old cloud chart resistance zone with another upside resistance target on the 4-hour is this top end cloud chart resistance zone 4162. So these are the upside potential if support holds at this cluster of cloud chart support levels on the 4-hour Ichimoku. Turning to the hourly Ichimoku cloud, you can see we had a nice rally here, cloud cross. There was a nice cloud cross buy signal, then a rebound trade here as it found support at the top end of the cloud. Then a nice rally, ran into the resistance zone here at 4,000, basically pulling back now, testing the standard line of the cloud for support. And then we can see this possible support zone at this front end cloud chart level, 3922. And then the bottom end of the front end of the cloud is another major support zone on the hourly Ichimoku, 3866. So these are the downside risk targets for consolidation and then a potential rebound from these levels back up to the old resistance levels as we've highlighted on the 4-hour. But so far on the 4-hour, we really need to see price action stay above this top end cloud, and in a worst case scenario it should not drop below this bottom end cloud chart support level. If we dip below this level, then the market on the 4-hour is in serious trouble. But overall, from a big picture perspective, there's only really swing trade opportunities since price action is still below the Ichimoku cloud in a long-term basis. Until next time, happy cloud chart trading. Bye for now.